Coming up on Market to Market, investors wrangle with news from the Fed's High Plains meetup. Fires continue to whip the West as storms pound the nation's midsection. And antique tractor collectors harvest a bumper crop of history lessons. Those stories and market analysis with Darin Newsom. Next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. This is the Friday, August 26th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. The ducks appear to be lining up for an interest rate hike, even as the broadest measure of the nation's economy is below an economic trigger. Second quarter GDP grew at an annualized rate of 1.1%, well below the 2% Federal Reserve benchmark for raising interest rates. However, economists predict stronger growth is on the way. Orders for durable goods jumped 4.4% last month, rebounding from a drop in June. Without big-ticket items, the measure rose 1.5%. This and other market factors had Fed Chair Janet Yellen saying the case for a bump up in interest rates has strengthened. There was no indication of if or when. The volatility on Wall Street has paralleled recent weather. Rainfall of 7 inches in some locations across the nation's midsection were the source of massive flooding. The weather front spawned several tornadoes that cut through Indiana and Ohio. Even as Midwestern floodwaters recede, wildfires continue to burn in the West. Tens of thousands of firefighters are answering the call. Nearly 600,000 acres have burned in 9 states this season. A fire of a different type still burns in the hearts of some history buffs. For tractor collectors, preserving the way to adjust the spark just so, pull the throttle to the right spot, and throw the flywheel with a certain twist of the wrist are all a part of the adventure. While the ability to start a John Deere B on a sub-zero day has been relegated to most memory books, producer John Torpy found a place where you can still feel, touch, and smell a little bit of the past. At the heart of tractor collecting is remembering and cherishing how these great machines sunk heavy iron into the rich soil at the beginning of the season, or helped bring in a field of corn that was ready for the bin. For one Southeast Iowa farmer, the hard work these iron beasts can do is the collection.
I did this in respect to my heritage, my dad, my grandfather. I happen to be a farmer. I'm the 7th generation into farm. I have 2 sons that are farming with me today, and we're keeping that heritage. They came from Germany, wanted to come to the New World and start farming. They kept moving west, and this is where they ended up at. And so I guess it's a heritage that I'm just trying to preserve. These machinery were important in their day, and they had a purpose. And some of the stuff they were designing was unbelievable. And so that's why we do this show.
For the better part of a decade, Dave Kobler of Ottumwa, Iowa has cherished the land that 7 generations of his family have farmed. Pride in farming spills over onto the machines he and his family use to write their story. So each year, toward the end of the harvest season, Kobler saves back 20 acres of crops for antique harvest days. Free of charge and open to the public, the event is a chance for people to read for themselves the chapters antique farm machinery wrote on the Kobler farm. The harvesting is spread out over a weekend, filled with shocking, threshing, shelling, and harvesting, with equipment ranging in age from the turn of the century to the 1960s and 70s. And while most tractor shows are focused on perfectly pristine farm equipment, this show shines on the dirt being turned as machinery from a distant era is worked to harvest history lessons for a new generation.
Well, this is our livelihood, you know, this is what we've always grown up with, and this is what is farming and produces food, you know, this is how it all began. You know, these were the true inventors that started with nothing and they had to come up with something. They had to come up with a tractor, or the Waterloo Boy, or, you know, they were trying to better themselves in lives, and we just drive by this stuff every day and see it, you know, and nobody respects how it really started, you know. Stuff's gotten better over the years and bigger, but they're the true inventors, and the ideas are unbelievable what they came up with.
Clamp the bolts down, which pulled the splines, because it has to be slid on to engage the spline.
Guests to the farm have the opportunity to learn how the equipment works, whether it's the hand crank shellers or keeping the Waterloo Boy running for the baler. Everyone gets a chance to take a turn learning firsthand how these machines changed agriculture forever. The love of these old machines, like the love of farming, runs through the veins of 7 generations of the Kobler family. DJ and Tyler represent the 8th generation working the land, and the tractor bug flows through them as well.
I like the old ones. I don't know if I necessarily have a favorite. I've seen so many odd ones, and that's one thing cool about this show is we don't have, you know, a lot of people and a lot of tractors, but I think we have a lot of different stuff that come to this show, you know.
Oh, I think it's wonderful because the younger generations gets to see what's going on, how it used to be. It's not everything's big combines or anything. It's just what it used to be. And I was telling Dad that I like how everyone brings something different, and there's different ideas for this different stuff. A lot of people don't even know what a Model A tractor is. People need to know this stuff because this is what it used to be, and people need to know history, in my opinion, because it's very important.
Hosts and guests alike recognize the importance about this one-of-a-kind, hands-on history lesson.
Well, it demonstrates how things used to be done. All the hard labor that they used to put into it. And it's kind of a dying thing. These machines are hard to come by.
Richard Taylor of Moulton, Iowa volunteers every year for a chance to harvest some important memories. His multicolored tractor experience growing up helped him appreciate the diversity of all makes and models. While he can respect the modern conveniences of today's technology, he can't help but recall, first and foremost, remember where you came from.
Yesterday, for instance, I was able to pick corn out here in the field and on a tractor-mounted picker, and I used to enjoy that immensely. But it was 1984 was the last time we did anything like that, so I counted it up. It was 31 years since I'd been on the machine. And there happens to be a friend of mine here today. He has the exact model of tractor and the exact model of picker and everything, and he let me ride it for a few rounds, and it was a very nice experience to reminisce and say, hey, I've been here before.
Honoring where you have come from is the essence of Antique Harvest Days. For Dave Kobler, watching the excitement on the faces of both young and old alike lets him know that his guests are harvesting memories for the next generation that will keep the lessons of rewarding hard work alive.
The purpose of this is to keep things from getting junked and tore out. Everything had a purpose. I don't care what nationality, John Deere, international case, whatever. That's how this country got the way it is because of those type of inventing type people that made our society the way it is today. I guess what my purpose is to preserve that.
Next, the Market to Market Report.
Reports from the Pro Farmer Tour, foreign prices, and fund buying activity made for plenty of volatility in the commodity markets. For the week, September wheat plummeted a whopping 44 cents, a 10% loss over last Friday, and the nearby corn contract fell back 18 cents. Lower palm oil prices put pressure on soybeans as the September contract took it on the chin, falling 36 cents. September meal dropped $8.80 per ton. In the softs, heavily pressed December cotton ended even. Over in the dairy parlor, September Class 3 milk futures lost $1.25. Prices in the livestock sector were lower this week as the October cattle contract lost $3.90. September feeders gave up $3.93, and the October lean hog contract was down 61 cents. In the currency markets, the U.S. dollar index rose 106 points. Crude oil dropped $1.47 per barrel. Gold lost $20.30 per ounce, and the Goldman Sachs Commodity Index was down nearly 6 points to finish the week at 364.60. Here now to lend us his insight on these and other trends is one of our regular market analysts, Darin Newsom. Darin, welcome back.
Thank you, Mike.
Whew. A lot of red on the screen this week.
A lot
Darin.
of red.
The only thing up was the dollar.
And that was wild.
Yes.
I mean, financial markets worldwide were waiting for this speech from Chairwoman Yellen today. And it was fascinating to watch the dollar. It started off before the speech down 200 points or so. Minute the first lines were spoken, it rallied to where it was up 300. And then it was down 400 within 10 minutes, just back and forth. It was crazy. It was wild.
Looking at things as you do, where you trust the market to tell you where the market is going, what does a move like that signify? Or is it, since it all was in one day or 30 minutes, can you discount it almost entirely?
You can pretty much discount it. It's like the release of a USDA report. You have to ride through, it's like throwing a big log off a bridge into a river. It makes a huge splash, a lot of chaos, a lot of volatility, but then it calms down. It's where it calms down. When all was said and done today, dollar gained a little bit. That was because there was some hawkish talk, words in the speech itself. So that's the key. That's the takeaway: is where did it finally settle out?
Okay. Speaking of where is it finally going to settle out, this wheat market has been in a free fall. All classes are down, down, down. Broke through pretty much every level of support that folks have been keeping an eye on this week. Where do we go from here, Darin Newsom?
It's a tough call. We closed at the lowest levels in 10 years in the Chicago market. Kansas City's not far behind. So, we're talking about levels we haven't seen since 2005. It has no friends. You can't find anybody willing to buy. It's that, when the CFTC report came out this afternoon, non-commercial traders still holding a net short. They're not willing to buy back at this level. So, it's just a market that, because, I'll say something out of character for me here, but because of the world fundamentals, there's just nobody willing to buy it. Because there's this idea that the dollar is going to rally, possibly. You throw that in on the top of the world fundamentals, and where's wheat's bottom? I don't know. We're getting awfully low. But until we start to find some consistent buying interest, I think we can continue to slide lower.
Okay. As folks are getting ready for the winter wheat planting season, as they're thinking ahead for next year, we've got a question here from Nathan on Twitter at FarmerNate. He's asking, at what price are we money ahead to do nothing in wheat, just plant covers and graze it off?
We're there. I talked to a lot of Southern Plains farmers over the last couple of weeks, and if you just use an average yield of roughly 35 bushels per acre on dry land, you're losing $2 per bushel, $70 per acre, without adding in insurance and that sort of thing. You're already there. Why? And I know it's not a popular topic, because the question is, what else can you do? Why grow wheat at all? I wrote over a month ago, the U.S. doesn't need to grow a wheat crop. It doesn't need to grow a wheat crop. There's plenty of wheat in the world right now. Most of the large buyers don't want to buy from the United States. If the dollar wants to start to go back up, because the Federal Reserve is going to begin raising its interest rates, the U.S. wheat's going to look even less attractive. So we have larger supplies. We've already got ending stocks to use domestically of about 50%. We're there. We don't need to raise wheat right now.
Okay.
It's hard to say.
It is hard to say, and it's hard to contemplate all of those dryland wheat acres as money-losing propositions at this time of the year. But as you mentioned, with the basis being $1 plus under,
basis for hard red winter, using national average cash prices, we're looking at like $1.17, $1.20 under the December futures contract right now. It's a wreck, and it could get worse.
Let's find some more positive news, Darin Newsom. Let's jump over. Pro Farmer's been out in the field. They released their Pro Farmer estimate of the corn crop at 170 bushel per acre, 5 below USDA. They released it after the market closed on Friday. We saw corn down 7 cents today. From a chart perspective, what do you anticipate this next week?
The closer we get to harvest, the more pressure we're going to see on the corn market. Seasonally, if we look at the seasonal tendencies of corn, the market tends to post a high in late August, which we did last week, and then sell off through early October, basically as we take those new bushels in. I see no reason, I take that back, there's almost no reason for us not to see that same pattern this year. The only hope I think the market has really of really being able to move into some sort of contra-seasonal pattern is if yields aren't as large as expected. If when we actually get the crop rolling in, rolling into the combines and then rolling out of the fields and so on, we find out that it's not the 175 point whatever that USDA pegged in its August report, that it's not, as high as it's being talked about right now. That's when the support could come back into this market. If we do see yields up in that area, then the market's going to continue to struggle.
That being the case for producers who are going to be selling some at harvest because they don't have the storage, they need the cash flow, does it make sense to look out in the first quarter of next year, find ways to re-own it? Did you re-own December? Do you just wait and see?
I would not re-own it yet. It's the same thing with feed corn. If I'm looking to feed it, because of its seasonal patterns, yes, I know the market's oversold. Yes, I know that we're down near 5-year lows in the corn market as well. We're going to be testing possibly the October 14 lows here before too long. I know all these things, but I'm just not in a hurry to buy it yet. I'm not in a hurry to re-own it. I think we're going to have time. We need to see those bushels start to come in consistently lower than what's being talked about right now, I think, before we start to get some serious buying coming into these markets.
Okay. Soybeans, again, collapsed through a lot of support levels. We've seen 50-day cross the 100-day moving average to the downside. Things are setting up technically for not a very pretty picture.
Right.
Do you expect that to change here in the short term?
Soybeans have some time to come down. Some time and space to come down. Again, very similar seasonal pattern to corn. They tend to peak in early August, in late August and fall through early October. So I think they've got some room to come down. They could come down another 40, 50 cents. But I don't think, from a fundamental point of view, and even from a technical point of view, that the market's as bearish as corn. So I think beans will come down. But I think as they come down, you're going to continue to see large sales being made. I think there's still a lot of demand for U.S. soybeans. So I think the overall supply and demand situation is a little tighter than what folks are talking about right now. Yes, we are supposed to have a big crop, and we had a very friendly August weather-wise for the most part. The month that supposedly makes soybeans. So I could see it coming down. I could see it doing its normal seasonal pattern, but I just still don't view it as bearish as I do corn.
That 200-day moving average, probably the next big support level in your mind?
Yeah, from a technical point of view, yeah, possibly. I would rather go out to my long-term charts and use some retracement levels, which I think are down around 930, somewhere in that range. So that's really where I would target Nove beans, most likely falling over the next month or so.
Okay. Well, let's talk about this livestock market, Darin Newsom. Livestock continued to break down further. Live cattle in particular down another 390. We're testing those lows that we put in here 2-3 weeks ago. What are your thoughts? Are we going to bounce and start to climb, or do we have more downside room to run here?
Well, it's a little like corn right now, in the fact that, as you mentioned, we're awfully close to those long-term lows. Now, cattle look like they should hold. They should hold that in here. But again, if they don't, then we've got a problem, Then that that low that we thought was the turnaround point, all of a sudden has been washed out, and we don't know how much further it could go at that point. So I think it's going to hold. I think there's some fundamental strength to the live cattle market right now that could start to build some support in near these lows. We start to bring some buying back in, particularly if the grain markets fall apart and if Dow goes up, that certainly help. So I think there's some. I'm not overly optimistic. I'm not overly bullish, but I am at least a little bit optimistic about them being able to hold their lows in here.
Okay, so not a very aggressive seller in here.
No.
Hold off. Let's see if we can bounce.
If they break to new lows, then we're going to have to try to scramble and get some sales on. But I certainly wouldn't want to be making some sales in it at this point.
Okay. Feeder cattle also broke this week, although that was anticipated as we would have expected with that break in the fat cattle market. We're coming in. Fall calves are coming to sale. What are we seeing there in the feeder cattle market? Is there a hope again for finding a bottom?
Yeah, again, similar to what we see on the long-term live charts. I like the low that we had before. Unfortunately, in the feeder cattle, more so than the live, that was more of a spike move that we saw a few months back. Those are a little bit dangerous because it leaves that vacuum in the market. You don't really build a lot. You just drop down and you go back up, similar to what we're facing here in corn on some shorter term charts. So again, I'd like to see feeders hold in this area, establish more of a sideways pattern in here for a while, start to hold together a little bit. I think they can, particularly if live starts to move higher. So I wouldn't really look for the feeder cattle to move to new lows at this point. I could be dead wrong by Monday morning, but I would look for them to hold at these levels.
Is there any more volume coming into this feeder cattle market? There was a concern, or there seems to be an ongoing concern, that it's such a thinly traded market. Are you noticing any changes?
No, not really.
Okay.
It's still a very thin market. You have your main contracts, then you have your outlier contracts. They're really tough to get much done. There's some problems overall in the cattle markets and in the livestock markets as a whole, particularly in the cattle markets. But that is something that feeders have always fought, and just this low volume leads to some very wild price swings, a lot of volatility based on low volume.
Okay, let's take a look at the lean hog market. That was kind of the one bright spot last week. This week we're down only 61 cents.
Yeah.
What does that tell you?
Well, hogs have had a huge sell-off. They started to stabilize, and then they were able to hold. This is kind of what we're talking about for the cattle markets, is they were able to hold together this week. And so, from the hog market, looking at the hog market, I would say it's probably getting close to a turn. If not a long-term turn, at least something on the weekly charts, because I was impressed with how it performed this week. Now, hogs are hogs. They're going to do crazy things. They don't like to follow patterns. They don't like to follow any rules at all. But I would say that, just looking at the charts, it looks like hogs should be able to hold in here, start to build some support, and I wouldn't be too surprised if they don't outperform, live cattle and feeder cattle over the next couple of weeks.
Okay, might see some movement to the upside.
Right.
Well, Darin Newsom, thank you so much for taking the time to join us this week.
I always enjoy it. Thanks, Mike.
That wraps up the broadcast portion of Market to Market, but Darin and I will keep the market conversation going, including answering more of your questions during Market Plus, available on our website. For some Market to Market stations, this is Pledge Week. If you believe in the service that brings you news and in-depth commodity market analysis every week, take a moment to help support this public television station. And join us again next week when we visit a CSA that is doing customized orders to drive sales growth. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com.